The first 3 years of my day trading journey felt completely hopeless. I was wandering around from strategy to strategy, trying to see what would work for me, and all of it just led to the same unprofitable results. If that sounds anything like you, in this video, I'm going to help you guys and show you the exact 4-step simple trading model that actually made me profitable. After all that pain, after all that time, banging my head against a wall, just wondering what I was doing wrong. In the end, all I actually needed was a simple, repeatable, mechanical system that took my emotions out of it, that took the guesswork out of it, and that ended up making me a more efficient and disciplined trader. So let's get right into the 4-step trading model that I'm referencing. So the simple 4-step trading model that changed my trading forever is called the STIM model, which stands for sweep, tap, inversion, momentum. Okay. So the first step is we want to make some type of trend move that creates an imbalance, right? And that is also referred to as a fair value gap. And we'll get into chart examples soon. So you want to have this imbalance, right? If we're looking for longs, and then you want to put in some type of low inside of it. So you want to swing low inside of that bullish imbalance. Then what you want to see is a move away from that low that you put in that's inside or right above the imbalance works too. And then you want to sweep it, right? So you want to make another move down. You want to come down again, tap into the imbalance once again, take out that swing low you set inside of it. And then while you're making that sweep move down, you want to set up a bearish fair value gap or bearish imbalance on the way down. Now, the reason we want to set up one of these on the way down on a lower time frame is that once we tap and start reversing, and that's what you look for here, you want to invert that bearish gap. So close a candle above it, right? So then once you have that and you have good momentum, in this case, you would take longs targeting the recent swing high, which would be right here, right? So that's what you would target. Now, you would also be able to do this to the downside if you just flip this entire thing over. So let's get into the chart example of it right now. So right here, as you can see, we have a perfect STIM model on ASTS. Now, this works on ES and Q. I traded on the lower time frames for futures day trading there. It also works on stocks, right? It also works on big tech, popular stocks like ASTS. It works on crypto. We're going to get into an Ethereum example, Tesla example, Meta example. It works on more stuff than you could even ever imagine. Okay. So real quick, take a snapshot of this entire thing. I might just actually take a screenshot of it and overlay it with this because you'll see, look at this. This is exactly what I'm talking about, right? We have this huge bullish trend move that creates an imbalance. And if you even go to the weekly chart, you'll see it's even more obvious, or the monthly. We create a monthly bullish fair value gap right here. Now, if you guys don't know the fair value gap, it's a 3-candle pattern, right? And it's the empty space where no wicks coincide between 3 candles, right? So you can see we have this massive impulsive move right here, and the candles to the side of it, right? The one before, the one after, they have wicks, but they don't ever fully intersect through this massive move up. So that's a bullish imbalance right there. These are going to be very good zones of support, right? Where you can expect price to retrace to them oftentimes and then continue, especially on a higher time frame like the monthly chart. So we have this monthly bullish gap, we retrace into it, and then you go back to the daily. So you've got that marked out, right? Okay, so we have the tap, right? Now we can also see we have the sweep, right? We had this set of swing lows inside of this range, and we come down and take them out. Now, a lot of people at this point are going to be very bearish, right? So that's another reason that this model works so well, because it's almost like a fade the public, right? People are going to think this is some type of like head and shoulders breakdown, right? They're going to say, oh, this is a head and shoulders right here. We're breaking down. And then once we get that breakdown, that's where they're going to try to chase short. What's going to happen a lot of times is if you're shorting into a bullish imbalance, you're going to get absolutely cooked, right? And so you can see this is the spot to go long right here, right? The very next day, we end up inverting this bearish fair value gap. I need to play it. Yep, right there. Okay. So we end up inverting this bearish fair value gap, right? So we have the sweep, as you guys can see right here. And I'll overlay the image right now. So this is the sweep. This is the tap. We'll just label it out too, so you guys can really see it. So sweep, tap, and then right here we have the inversion with momentum. That looks like pretty damn good momentum to me, does it not, right? We have this massive impulse move right back through this bearish gap that we created on the way down. Now look what happens. If you take longs from 48, right, targeting the recent swing high, and you can do options, you can do leverage shares, whatever, but even with this, Imagine you're targeting the all-time high swing high. That is about a 25% gain. And if you want to target the 1.618 of this entire range, which is a very solid target in this type of move, you're going to be getting, 76, right? So let's do some math on that. Well, 55% about to the 1.618 of this range, and basically 25% to all-time highs. Now, if you had taken that, you wait basically less than a week and you hit all-time highs. And not too long after that, you're up at 76, right? So it is a very effective model. That's just one example, but hopefully, guys, you now get the premise of it. I'm going to show you guys some other examples, and then I'm even going to give a bonus example of one that might be playing out in real time right now. Okay, so let's look at Ethereum. We had a really good one this summer. So we're going to go to the weekly chart so you guys can see what I'm talking about. So this summer, look what happened, right? I'm going to go into replay mode and we'll talk about it now. So we go into replay mode. We see that this summer we had this bullish weekly imbalance that we created. Remember, it's a 3-candle pattern. It's a fair value gap. Imbalance, fair value gap, same meaning the way I use it. So we have this candle right here, the wick, this candle right here in the wick. Neither one is impulsive moves. These are consolidation. This is the expansion. So when we return to this expansion level, you can expect a retest and then continuation of the trend, which is bullish, right? Because we had bullish expansion here, okay? So now what happens? You go down to the daily chart. You have that weekly bullish imbalance marked. So you know that if we get back down into that, you're going to be looking for longs. You look. Oh, what happens? Okay, well, we have this nice range here. We have these lows inside of it. What do? We sweep them out, okay? That's the S right there. We sweep these lows out that are inside of this range right above a very strong bullish imbalance. Then we have the T. We're tapping into the bullish imbalance. Now, if you look a bit closer, you can see, what do we have here? We have an inversion bullish, or a bearish that gets inverted. So it's a bullish inversion, right? We have this bearish fair value gap that we make on the way down to sweeping liquidity and retesting this bullish imbalance. And what happens? Boom, shoot right back up through it, plus 8% on that day. That's where you enter, around 2,400. And look what happens if you go long there. You basically never get into drawdown, like ever. Look, it just continues to either chop, and then it finally makes its next expansion. Now, where does it expand to? Well, the first target would be this swing high right here, which from 2,400 was about a 25 to 30% gain, I believe. Yeah, 20% gain. And then your final target, all of these relative equal highs around 4,100. Why? Because it's a lot of liquidity built up at this area, clearly. So a lot of people would classify this as a resistance zone. I classify it as a draw on liquidity, right? Price is going to want to go back up there because there's been so much business done at that level, significant business that marked reversals, that we're going to want to retest that area, okay? And what happens from 2,400, if you took it all the way up there, which I did, and I called it on my Twitter, you guys can check it out. It is pinned on my page. I'll link my Twitter in the description, my X, whatever. If you had read that with me, it would be a 72% gain for you in the matter of like 2 months. And you could have even gotten more out of it if you had done options or shares, whatever it might be, right? So perfect example of a STIM model. Now, we're having a few right now that we could possibly be getting if you turn off replay mode, right? Meta might be having one. If you look, we had a weekly bullish gap, I believe, that we tapped into last week. Yep. And we have a very positive reaction off it so far. Now, if you look at the 4-hour time frame, I believe we had an inversion on that, right? So if you go to extended trading hours, you can see that right here on this exact candle, we had a bullish inversion of a 4-hour bearish gap, and we were inside of a weekly bullish gap from a while ago. Now, what happens off of that? We have basically a 10% rip, right? We just are going straight up. It's like we're moonshot, right? So that's another perfect example of a STIM model that is playing out in real time. Now, I did not actually catch that one because I was very, very busy last week. That was Thanksgiving week, so maybe a ton of people didn't actually trade much last week, but it was a perfect STIM model, and it has been playing out. Next up, you've got Nebius. Now, what happened with Nebius? Well, we have this very obvious collection of liquidity in this here area, right? So right there, you look at that. That's going to be a great target. Now, we just wait this bullish weekly imbalance right here. What happens? We trade down into it. We take out this internal range low right here while we're on the way down to doing that, right? So we have the S right there. That's the sweep, okay? Then we have the tap right here, okay? As you guys can see. And then if you go to replay mode, I don't know why it's tripping. There you go. You can see that we had a daily bullish inversion right here, right? So we start to move up, but notice how we never have an inversion, so you don't want to trade yet. And then boom, we get smacked back down, create a bearish gap, start to rebalance into this range, and then we push back above and we get a beautiful inversion right there. Okay, and then the next candle we kind of consolidate, but we never invalidate it, we never take out this swing low. And then today we had a nice, pretty bullish day, right? I mean, that's a plus 6% day about. I'm actually in this trade right now, and we're targeting, 141, but it's too late to get in because the real entry would have been like 93. We're already up like 7% off that, right? So that's another example. Now, one that might be going on right now. I'm not a signal service, but I did just want to talk about this because it's a perfect example of my model. So if you look at Tesla, notice how Tesla's showing the exact same signature and price, right? We have a lot of business that needs to be done around this 470 to 488 range. That is the prior all-time high for this stock. Now, if you look, we had a monthly bullish imbalance right here, okay? Now, what happened? We wicked down into it, right? As you can see, last month. If you look also, we have these internal range lows that we took out on the way down to this fake breakdown, which is really just a retest of the imbalance. And then we have a nice move out of this range. And if you look at the 4-hour chart, we did actually get a bullish inversion on this massive bearish candle right here, right? So we have a bullish inversion. We're kind of hovering above it for right now. But if we end up pushing out of this and continuing, we should get a move up to like 490 and maybe new all-time highs. So we're basically trading with the big money here, right? Because what's going to happen is a lot of people are going to see us in this range. And I even saw this. I'm on X a lot. I'm on, financial platforms that are talking about stocks. So many people were hyper bullish right up here, right? So close to all-time highs. Now what? Radio silence, because we had this breakdown, but really we just had to rebalance into a bullish imbalance. Now is the time where, the big money, the smart money, is going to look to get their entries and load their positions. And that's exactly what we did, right? So should be a pretty solid opportunity to get continuation up to the 470s and 480s here. But like I said, please do not take a trade that I take just because I take it. I'm just talking about this as a potential idea to show you guys kind of the example of the STIM model. But you cannot take a trade on Tesla unless you understand exactly why I'm doing it and you fully agree with the direction of the trade, right? So I just wanted to make that clear. I'm not a financial advisor, nor am I a signal service, but I really do like this setup, and I wanted to show you guys one in real time. And if it works, great. If it doesn't, oh well, right? Like, that's kind of my mindset behind it. But to me, this looks really good. And yeah, with that being said, I hope you guys enjoyed the video. If you are still watching this, you're probably serious about trading, serious about getting better at trading. If that's the case, make sure to like and subscribe. I post a ton of educational content all the time that is all aimed at helping you guys become better traders. Like I said, I struggled for a long time before I saw any consistent results, and this model truly changed it all for me. And so I'm hoping it can do the same for some of you guys. I'm sure it will if you try it out. But as always, make sure you're just responsible with your money and make sure you're never over allocating or risking more than you can really afford to lose. So yeah, I appreciate you all for watching. Also, if you want to join my free trading Discord for completely free, join the link in my YouTube bio, or click the link in my YouTube bio. It's free, no credit card, no email, no nothing needed. Literally just click the link to my Discord and you're in. I have some info about this model in there. I post my daily bias for futures like ES and NQ, and I just talk about market outlook. And I also occasionally go live trading in there for you guys. So yeah, if that interests you, join up. But once again, I appreciate you all for watching. I'll catch you in the next one. Peace.